Hey, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe. Starting off with the S&P, where the very steep rising trend channel from October still remains intact, although it has to be said yesterday's support 49.20 almost exactly hit the floor of the channel there, and we're looking for that to remain in place. If that's broken, then obviously there's a risk of another 80 to 100 point decline, maybe 48.40, etc., which was the last dip at the end of January. On the upside, gap to fill up towards 50.20, which obviously at the moment seems like it's a long way away. Overall, while we're above the floor of the channel, let's call that 49.20, still looking for a possible move up to 51.80 and the top of the channel by the end of next month. Moving along to the stocks, and not many rises after yesterday's rug pull for the market, but a few managed to survive. Here we've got Antelope Enterprise, which has broken a line of resistance there from back in December. That's around the $1.80 level, and we managed to close above the 50-day line, $2.10, above $2.10. Best case would be up to $3.60 or 70 by the end of next month, but basically taking the shares back to where they were in September. The next stock is one which we used to look at quite a lot previously, but you'll see why we've gone a bit quiet while the trail went a bit cold in a second. We've got Chanson International, and here the rug pull was back in December, and it's been a very slow and gentle recovery here for the shares, trying to regroup. And here you can see the current situation is that we've got support towards $1.70. Above that, the best case probably up towards $2.70 or 80, and we're giving it until the end of next month, or hopefully a bit sooner than that. Moving on to another old favorite, which may be back in business, which is Conduit. Here we've had this rising trend channel base in place for months back in October, and the shares bumping along the bottom of that channel around $2.50. Initial target here, hopefully over the next by the end of February, up towards $4. Best case would be up to $9, but that's maybe a 2 to 3 month view, or even longer, given how slow the shares are taking to regroup after the September rug pull that they suffered. Moving along to Evolus, and here you can see that there's a rising trend channel in place since back in October. The top of the channel currently heading as high as $14, and we're looking at for that hopefully by the end of this month. We're backed by the unfilled gap to the upside that we had during January, and we're also, by the way, that in general, in the recent past, old resistance has become new support. So in this case, around $11.80, which was that January peak, and now we're back at the February support in that area. The next stock is one which looks very promising, especially given the recent price action. We managed to hit our initial target there around $25, above 25, looking for as much as 60, although obviously this is a very rocky ride. Want to see an end of day close back above that $27 resistance line target before we can map a move towards that $55 to $60 zone. A new stock for the Chartbreakers is coming up next in the form of Netsol, and here unfilled gap to the upside, which is what we like to see. We've had an extended consolidation here for the shares over recent, well, basically the last year actually, but looks as though with the gap through neckline resistance around $2.50, we are due a breakout, and the obvious place would be for the shares to head to $3.20. Ideally by the end of this month or a bit sooner than that. If you're looking for more detail, perhaps we could say that this market is in a rising trend channel from back in October, with the top of the channel currently heading as high as that $3.20 area. Next up is a stock which did manage to withstand yesterday's rug pull, Supermicro. It's doing a bit of an NVIDIA at the moment in terms of the progress within that very steep rising trend channel from last April. Top of the channel heading for $900, and we're still looking for that while we remain above the $750 area, which is basically the initial support for this week for the shares, but obviously very overbought there with the RSI well above 80, so maybe the shares are going to get tired over the next session or two, but $900 could even be hit by the end of this month. Moving along to another fresh face, and here It is Syntec, and here the situation is that we've broken above the 50-day moving average for the first time since November, first time properly since November, or before that even, and looking to see how much progress the stock can possibly make. Top of the channel there from December, heading as high as $8.50. We're looking for that as soon as the end of next month. Ideally, we stay on the right side of $5 in the meantime, the 50-day line just below that level at the moment. Most famous name in the selection today is Tripadvisor, and here you can see the shares have gapped up to that top of that rising trend channel from October. That promises a target even as high as $27, so there may be a little bit more gas in the tank for this situation. And the overall picture, though, is interesting in the sense that we have a resistance line projection from back in September or the summer of 2022, heading for $30. So above that $27 area, there could be a pop up towards $30 plus by the end of next month. Ideally, we stay above the resistance on the way down there around the $23 mark in the meantime. But really, in these cases, half the gap is probably the stop loss on that situation. Moving along to Verde Clean Fuels, and here you can see that the stock has been in a broadening triangle base. The top of that triangle currently heading towards the $5 mark, and we're looking for that as soon as the end of this month, in fact, after the recent consolidation that we've had, a very decent consolidation that we've had above a rising 50-day line. Ideally, we stay above the $3 area, heading for that target towards $5.50. On to the last two, and the next one looking quite attractive for the bulls with that spike through to, well, breaking our initial target there around $9.10, and intraday spiking up to $11.20, and that resistance line projection from April last year. Looking for that to be retested by the end of this month while we remain on the right side of $9. Finishing off with Whole Earth Brands, and here you can see that there's an uptrend line there from last year, early last year in fact, and that's running just below the 50-day line. 50-day line currently rising at roughly $3.55, and the uptrend line for $3.45. Want to see the shares, obviously, after the massive gap that we've had, stay above the old resistance there from back in January last year, around the $4.50 area. Above $4.50, we maybe still have the prospect of a further dollar move up towards that resistance line projection from June last year, and maybe over the course of the rest of February. That's it for me today. More updates tomorrow.